All right, January is forecasted to be one of the coldest months in several years, with more than 200 million Americans expected to see below average temperatures. Natural gas prices ran up more than 30% heading into the new year. And joining us to talk about the sector right now is Amrita. She is Energy Aspect founder and director of research. And Amrita, first of all, thank you for being here to talk us through some of these things. People think it's really, really cold. That means a lot more natural gas is going to get used. But your perspective on this and explaining a lot of this is it also means that production is going to be tougher in some places. Why don't you lay it out? What's happening here?
Yeah, look, thanks for having me. Happy New Year to everyone as well. Like you said, I think, of course, we are expecting additional gas demand, potentially over 120 BCF. But the key focus really is how much production do we lose, mostly in the Appalachia. The weather run is a little bit warmer right now versus what we were looking at the last week. We are still expecting 25 to 30 BCF of production losses across the U.S. Most of that is going to be in the Appalachia. Now, to put it into context, last January, the unnamed storm, we lost 55 BCF. Back in the day when it was Winter Storm Uri, we lost 150 BCF. So the losses this time around are smaller than some of these bigger ones, but it's not immaterial, right? Like the price rise is justified, especially because the market has been pretty bearish. It's just that if the cold as it currently stands, it's kind of spreading further south, so it shouldn't be disrupting more production. But you never know, these weather fronts do shift. And then, of course, there's going to be an upside to our 25 to 30 BCF number that I just mentioned.
Amrita, part of what I always think about with natural gas, I guess liquefied natural gas is part of the issue too, but what's happened in Europe, where things stand with Germany, the huge reliance that they had on Russian natural gas, and how the market has been so changed and disrupted post the Russian invasion of Ukraine. How do you sort this out from where we were just a few years ago, and what the whole future looks like over the next year or so?
Oh, I mean, it's a paradigm shift, right? And we have been calling for Russian flows via Ukraine to stop. We've been calling for that for a few months now, even though we had a lot of pushback, and that has, of course, materialized over the last few days as well. And therefore, we do think there is upside to European gas prices as well as a consequence of that. But the negative, of course, of this is that we have seen about 15% of European gas demand, industrial gas demand, being lost forever because of higher gas prices than in the past. We've also seen IRA from the U.S. attract more industry to the U.S. because one of U.S.'s biggest benefit is cheap natural resources. So I think U.S. has benefited indirectly because of this, and Europe faces both higher costs but now also lower demand structurally as a result of the Russian invasion of Ukraine and just structurally higher gas prices.
That's really interesting. The upside here in the United States on that industrial front, do you think that's long term? It's going to continue to grow?
Look, we have to wait for what President-elect Trump does with a lot of the IRA, but we do believe that it's not going to be a blanket, revoking of everything that's there. A lot of the policies are kind of focused on America first. I think tariffs do complicate matters. Ultimately, tariffs are negative for global growth, even if ultimately the aim is to boost U.S. growth. I think that is going to be a tough one to decipher just yet before we have the full details. But ultimately, U.S. does benefit from cheap feedstock prices. There's no two ways about it, particularly natural gas and NGLs and LPG. So I think industry will flourish in the U.S. Anything that requires cheap energy, U.S. has a massive advantage over Europe.
Just in terms of the U.S. consumer, watching natural gas prices like that up 27% over the 3 months, I think it's estimated that something like 65% of homes in the Midwest use natural gas for heating. What's this going to look like for the consumer here?
Of course, it's a hit for the consumer, but we should also remember that natural gas prices have been at rock bottom, right? In the grand scheme of things, the same thing comes back for oil and gasoline prices as well, that people talk about the rate of change, which is, of course, fair when prices do go up a fair bit and quickly. But we have to remember, I mean, natural gas prices fell so low. It was almost like $1 per MMBTU, right? Not that long ago. Right. And we have seen consumers also deal with $11, $12 in the past, right? So, yes, the percentage increase in some ways looks very high, but also looks very high because it's coming from a very low base. So I do think in the grand scheme of things, it's not going to actually be that detrimental for consumers because the outright price is still very low based on historical levels at least.
We've got to run, but WTI just below $75 a barrel right now. What's your guess for where prices are headed over the next 3 to 6 months?
Again, it's been a quiet rally for crude as well, right? It's TI is almost at 75, was below 70. We think Brent will be at about $80 average for this year. WTI is about 77, so we do think there's a little bit more upside, not just because of the cold spell. Inventories are very low. Look at Cushing stocks. That's the one chart I'd say to watch out for. Inventories have ended 2024 at the lowest levels ever for this time of the year, and I think people should be concerned about just how low stocks are.